The third tax related to pay is income tax. Okay, remember this is a direct tax. So the other two taxes we looked at in the other lessons were USC and PRSI. Okay, so income tax, or PAYE as it's also known, something called either or both, is pay as you earn. So it's again another tax on income, and we will be looking at pay slips further on in this lesson. So just to look at this quickly. So when it comes to the PAYE system, as I said, it's direct tax on employees' earnings or pay. It's statutory, so it has to be paid. So the government, again, it gets deducted from source from people's pay. So that's why we look at the pay slip. And you have no choice, like USC and PRSI, you have to pay it. Non-statutory would be maybe you pay health insurance out of your pay slip, and we'll be looking at them soon. Okay, and remember all this gets sent to the Revenue Commissioner by the employer then. So when they do their tax returns, maybe their accountant would calculate all that and send a check to the Revenue Commissioners. So unlike PRSI, USC and PAYE, I suppose, when we looked at PRSI, there was a straight percentage for the employee and another percentage for the employer, whereas USC, there was 3 different rates or bands to look at, and now we're looking at PAYE. There's 2 different rates, so you have what's called your higher rate and your lower rate, and it all depends on how much a person, we're going to be looking at their bands also. So tax rates and tax bands will come into play here. So it's probably the trickier out of the 3 taxes on income. PAYE is quite complicated. There's a lot involved. There's be tax credits as well, that will reduce that tax in particular. So we're going to look at that in more detail now. So when it comes to doing your payslip, people get paid a gross amount. So that's what they should have been paid before deductions. So all the different taxes, statutory and even non-statutory deductions will be if they're paying PRSI or maybe union subscriptions. Okay, and then they work out how much their net take-home pay will be once the tax is worked out and deducted from the gross pay. Okay, so remember it's progressive. Taxes are this tax, even PAYE, is progressive in that the more you earn, the more you pay. Efficient, because there's a new PAYE system now that's all online and more real time. The Revenue Commissioner more aware of what people are paying and how much is owed. It's direct because people are aware of it. Remember, it's a direct tax on employment, whereas VAT, for instance, be indirect because people, they're not so aware that they're paying it. Okay, so tax rates first, as I said, there's a higher and a lower rate. So the standard rate is 20% and 40% is the higher rate. So when it comes to the cut-off point, so most people pay 20% up to a certain point. Okay, and anything after that will be calculated separately at 40%. And the bands are, so depending on how much you earn, so for most people, if you earn up to 35,300, you're talking about here having to pay 20% on that much, and anything above that you earn then will be separately calculated at 40%. Okay, and depend on your circumstances. So if you have children or if you're married, there'll be different bands and rates. Maybe one person is working in the household and they'll get all the credits and bands and so on. Okay, just be aware of that, and that will change a lot when it comes to the budgets. So that will be updated, either reduced or increased, depending on how the economy is going. So an example here. Okay, so of Lisa Small, and we're looking at the solution now in a second. So Lisa's PAYE or income tax Her circumstances are she's 65, single and does not have children. She earns a salary of 45,000 per year. She pays 5,000 on this in her pension fund, so we're looking at that as a non-statutory, it's not a tax. So her taxable pay is 40,000. So what happens is the 5,000 will be deducted from her salary to calculate for tax purposes. Okay, and she pays tax at the rate of 20% on the first amount up to 35,300, because remember her circumstances. We had the table above, so she's paying 35 up as far as 30 or 20% on the first part, 35,300, because of the fact that she, well, I didn't mention she had children anyway, so that's where her rates come in there. Okay, and it said that she was single. She's single and doesn't have children. Okay, so I made it clear there. Now we were aware anyway what the band was. So 20% on that would be €7,060. Okay, so obviously she earns more than that because she earns 40,000, all right, or the taxable amount is 40,000 even though she earns 45. So gross salary minus salary taxed at the lower rate, so the remaining salary taxed at the higher rate. Okay, so 40,000 minus the 35,300 that we've already calculated up here. Okay, so the difference there would be 4,700 that still has to be taxed, but at the higher rate. Okay, so getting 40% of that 4,700 then would be 1,800. So that 1,800 added to the other rate, the lower rate. So for the first 35,300, the lower rate and the tax payable, this is yearly now, is €7,060. At the higher rate, because she earns more than that, it's 1,880. So adding the two of them together, it would be 8,940 in total. So that's for gross tax, or PAYE. Okay, now there will be credits. We're going to talk about that depending on your circumstances as well. So tax credits. Under the system, you can offset or reduce your tax liability only for PAYE now, not for USC or PRSI. So there's a difference, okay? So you'll get them depending on your circumstances. So you get credits based on your age, okay, and other circumstances. Then if you have dependent people, if you're a carer, blind person, and so on. Okay, and everybody gets credits as well just for being a PAYE payer. So that's called your employee tax credit and a single person tax credit. So you get that as well just for yourself. Okay, so Lisa, back to Lisa's example, she should be paying her liability for PAYE is 8,940 when we worked out 20% and 40%. But she has credits, so over the years everybody gets that, or sorry, if you work you get 1,650. If you're single, 1,650, and you'll also get, if you're married as well, so there'll be a separate one there. And because of her age, because she's older, she's going to get also €245. Okay, so her total credits for the year are 3,545. So she should have paid 8,940, but she gets a reduction there, so that's her tax credit of 5,395. So now she only has to pay, not only, but for the year, that's her amount. And obviously, if she gets paid monthly, that would be divided by 12, weekly divided by 52. All right, and then the total tax liability would be looking at the other two taxes as well, the PRSI and USC. All right, so the PAYE, PRSI, USC be the total tax liability. All right, so that's it in total there. Okay, looking at a payslip then. So every employee is entitled to a payslip by law. Okay, so I want to look at an example here of Neve Murphy. And her annual salary is quite high income earner, so she'll be paying a lot more on that 40% there. But she also gets 2,000 of a benefit in kind or a perk. Now that is taxable, so that will be actually added on to calculate our tax, whereas previously the person who was paying for pension, it was taken away before the tax was or calculated. So for this person, a single taxpayer, so she has her tax band or cut-off point even is 32,800 for the lower rate of 20%. She will have credits, the usual too. Okay. So there's a couple of things going on here. Her universal social charge is asked about here as well. So we know that we have to do the 3 different rates, and the PRSI is just straight 4%. Okay, so let's have a look at it, a full pay slip here in total. Okay, so the gross salary, as we said or saw, that was 88,000, but because she gets a benefit in kind, that will be added on. So her gross income is 90,000. So everything would be calculated based on that. Now, just be careful there, because when it comes down to the end, because you're calculating the tax on the 88,000, you don't double do it, or sorry, on the 90,000, you don't double do it at the end when you're taking away that tax. So you go back to the 88,000, to take away the tax. Just be careful there. Okay, so calculating the 3 different taxes then. So we'll start with PAYE, that's the hardest one here. So remember, her cut-off point is 32,800. So get 20% of that. All right, so that's the first amount of tax, or the lower rate. High income earner, so anything, the difference between the 32,800 and the 90,000 is the 57,200. Okay, because the two of them together would make up the 90,000. So you just kind of separate the two, put one part at 20% and the rest that's remaining at 40%. So there's the two amounts for PAYE. Add the two of them together in total is 29,440. Now we're not finished there, because remember, this is the hardest one to calculate because of the credits. All right, so the 2 different credits that she has will be taken away to reduce how much. So the net payable then is 26,140. Now it's a lot of money. It's over the year, but she is a very high income earner. So as I said, progressive means the high income earners pay more. Now, the next one would be the PRSI, is the easiest of the lot to calculate. It's just 4% of that 90,000, so it's 3,600. You'll see 3 different rates, right? 2, 4, and 7 in this case. For the first 10,036, next bit, next part, or section, and the next section of her income, whatever's left over. And again, because she's a high income earner, she's going to pay a lot more at that higher rate. All right, so that's 5,618. So if you add the 3 of them together, it's 26,140, the 3,600, and the 5,618 and 80 cents. 3 of them together would be, so if you add the 3 of them, total statutory deductions would be 35,358.80. Okay, so remember, I said to be careful here, don't take that away from the 90,000, because this figure here was worked out on the 90,000. So don't double kind of do it. You're talking here about going back to her original pay without the perk. So the perk is just that 2,000 is included just to calculate the tax. But remember, it's not actual money that she received, so it can only be taken away from the money she receives. Okay, and so that's pretty much it. The net pay for the year now is 52,641, so a big drop there from the 88 or the 90,000. Okay, and this question asked about per month, so it have to be divided by 12. So that was an added element to that question. So just be careful how they phrase it. Okay, so moving on then. Looking lastly then, and we'll give you some questions too, looking at other household taxes then. So the local property tax is a tax based on properties, obviously. So if you have a house and you owned a house, you self-assess, you claim, you say how much it's worth, the market value, and the standard rate then is just 0.18% on that. So an example here would be if a house valued at 225,000 at 0.18%, then for the year it's paid on the 1st of November each year. And because of coronavirus, things were deferred when it came to property taxes and other taxes. Just be aware that 405 could be paid. Okay, and so that's pretty much it, looking at the local property tax. And some questions to do then on that lesson or section. So what are tax credits? What is the difference between PAYE and PRSI? Now I'll post these questions on Teams for you anyway. Outline 3 features of the PAYE system. What are the current income tax rates and bands in Ireland? How does the requirement to pay employment-related tax affect households, and some then calculations for you to do as well. And I'll post the solutions once you get them done and submitted. Okay, so just hopefully these are the things you should be able to say you know how to do. So you understand PAYE, you can calculate a pay slip, you understand what a tax credit is, what full tax liability would be, what local property tax is. We look at the implications in the next lesson. Okay, so just do the questions here and submit them.